Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, April 9th, 2025. So, today's a perfect example of what I was saying, where, if you're just really selling everything because of tariffs, that's not really what the big money does, because the tariffs can be wiped out overnight or intraday like they did today, and that's the thing. So you don't get it. I mean, was it frustrating? Yes, I was frustrated yesterday morning. I think I let that loose on the video. But the thing is that they still, I had a little bit of a cooler head going into the morning notes today, and I said you don't want to really lose your cool here, and you want to be looking for a bottom. And Trump paused the tariffs for 90 days, and the S&P gained more than half of the losses back in a few hours. So this is it. Now, are the lows in? I think it's going to be a little tricky, and this is the reason why. I think the lows are in for the Dow. Because what happens is the money that comes from overseas, they really primarily goes into the Dow and the Dow stocks. So that's, say, your overseas money, some institutional money. Then the next thing it goes into is the Nasdaq and the S&P. So right now, I do believe that we have seen the low in the Dow, but I do believe we're going to see some choppy markets, and we may see the S&P back down here again. I keep popping up that last week of April and early May. It keeps popping up on a lot of the cycles that I follow. And that's really for the S&P. So I think that right now we got this rally. It could extend tomorrow, just really at the open. But I wouldn't be crazy with it, expecting this to go up to the 6,000 level. Right here, this move right here, where this is the 78% retracement. If it gets above it, then we're going to do a complete 100% retracement. And what we can do from there is then take a look at what the next pivot line would be. And we're just going to go from the all-time highs here and bring it down and say, all right, well, if the bulls can get it up, back up above the 55.15 level, then we have a shot. You can see we have the 50-day moving or the 200-day moving average. That's sitting at the 55.70. So that's right in between. I think anywhere between the 56.50, 55.70. I think that we're going to see some people become a little bit, say, cautious. And even going into Friday, I think it's going to be the same type of thing, because, yesterday did throw some uncertainty into people, with the traders, because, like I said, everything was working out great. And then when he announced those tariffs, on China, the market, just did a complete reversal. So you're going to get some people that are still going to be tipping their toes in the water. But we had, today was really your first major short squeeze. Now, something else I just want to take a quick measure of is see, if this is just an ABC move, what would it be? So here you have your 1, 2, and 3, and we made it a little bit above. So what we want to do is find out what are the next pivots. So we made it to the 123. Now you can see 138 here brings us, we have this gap up here too that I'm not saying won't get filled. This one got filled already, but like I said, I think that to come Thursday or Friday, we're going to see some people get a little bit cautious and pull back, and we, I think we're going to see some pretty choppy markets. But right here, we didn't. Again, we never made the new lows, so we didn't. We don't have the bullish divergences in place here, so. It could be that we make 5 waves up, where we go 1, 2, 3, 4, and then 5. And then come back down for a B. I think it's going to be very choppy. That's probably the best way to put this. So we're pretty overextended on the 60-minute charts. We don't have any bullish or bearish chart divergences. 15-minute, we are extremely overbought here. But again, there's a lot of pent-up buying that's in place. So we want to keep an eye 55.15. If the bulls can gap above that, then we start looking somewhere between that 56. Where was I saying? Right here, the 55.70, or possibly up to the 56.51. So that would really clean out a lot of the bears and then open up the door for a little bit of a nail biter down. And again, I'm not saying that the bulls are out of the woods yet with the just going into the last week of April into May. I think after that, then we can start looking at saying, all right, we have some major lows. We're probably going to be making new highs, and from there, it will take us into the October time period. But we got the short squeeze that we were expecting. Now we become cautious. And I'm not pounding the table or saying anything about shorting the market. I just want everybody to be cautious that was buying, and just been buying the lows like I've been suggesting down here, and you take profits and you just run with smaller size. And if you're long from today, especially in the quantum stocks, then those you just put stops in place. And when right now, I know some of them went up 25% today, and all you do is you take some profits off of there, and if it pulls back, then you start putting that money back to work again. So again, on the upside, resistance is right here. We have it at the 55.02. That is the 50% retracement. That is also this right here, this resistance. If they get above it, then we're looking at the 55.70. But I would be very careful only looking higher up here, just because, like I said, I think we're going to see some choppy markets, and we don't want to get caught, with good profits and then see them disappear. So I'm looking both ways right now. I'm not, like I said, short-wise, I'm not 100% sure I'm going to be shorting, but if we get a gap up, I may be looking to sell some call premium. I've been selling the put premium. Yesterday, that did not work out because we had that big reversal. But, I think that we can, pick and choose where the resistance is, sell some credit spreads, and then, have it really just say protect it going either way, whether it be up or down. But you're going to be hedged with it, and I think that's going to be the best way to go from here. So the fund did pretty good today. We made $13,720. So that was primarily because I had a straddle on the spiders today, and obviously that worked with it because I had the 98 and the 93s on it. And then what I did is I actually did sell some call premium here, and that got stopped out. So it would have been it would have been a larger day, but right now like I said, I'm taking this very conservatively on this, and I'm it was a good day. It could have been better, but I'm fine with what we did. It was a fantastic day for the fund. So let's see on the downside, where's support? So basically what we want to keep an eye on is, let me just get our fibs out here and bring this down and say, okay, so on the downside, we have, this is going to be the first support. It's going to be right around this 53.32 level. And that's a pretty good drop that's over 130 points on the downside. But this is really your first support level. Well, we have it right here. I'm sorry, let me rephrase that, because this is support right here, but I think it's going to come in here, here, and here. So this is, I would say, where I would be looking to, if you're looking to buy dips, this would be a decent area right here. But like I said, we may be coming down and test this 51.58. It's going to be very, very choppy. That's probably the one thing that I can assure you is I don't believe it's going to be a melt up. There's just been too much damage done to people's psychology with trading right now. So we're going to get some very, very choppy markets, and we just want to be able to maintain them. So when we're coming down, I wouldn't be looking to short the market at support levels, but I wouldn't be looking to get long the market at resistance. You simply, you take the trades both ways and just let it slide. So let's see what plays out tomorrow. Have a fantastic night, and I'll talk to you guys in the morning.